There's 2 minutes to go before we hit market open. Ajay Bodke is with us right now. Gaurav Bisa is also joining in. Ajay, thanks very much. Gaurav, thank you very much for joining us. Ajay, this housing finance move which we were talking about earlier, how do you think it's very significant?
Yeah, I think it is certainly going to make a positive impact on the banking sector. And I think, as you mentioned in the previous module, we are waiting for the regulator in the housing finance sector also to roll out similar reduction in risk weights for the housing finance companies. So I think it would give a fillip to some of the PSU banking stocks in particular, which have sort of seen a lot of pressure over the last few months. So I think net it is very positive. It's a follow-through on what the RBI had sort of mentioned in its monetary policy. The details were out yesterday. So the market had sort of built in a post-announcement of the monetary policy that there would be a fillip to these companies when the policy is spelled out, and it was spelled out yesterday.
You think these stocks, LIC especially, has a lot more upside? Do you have coverage on the stock?
Yes, we do have coverage in the stock. We see some upside in LIC in the medium term. A couple of reasons. I think the wholesale cost of funding has gone down quite significantly, and the company is relying a lot on wholesale raising of funds. I think, as the economic recovery picks up steam over the few quarters, I think, we expect the volumes also to pick up. What will actually hold them down is that the high margin builder loan portfolio, which used to be at one point in time 10% of the book, has been brought down to hardly low single digits. And that sort of caps the upside insofar as the net interest margins are concerned when I compare it to HDFC, which is a higher proportion of book which is allocated to the builders. So I think there are these pulls and pressures. But all in all, I think there is some upside in the medium term for LIC housing.
Okay, Ajay, what is your own sense on the market itself? You think the market's set for more?
I think I would tread with caution going ahead because for the last 2 quarters, we have seen the market, an exuberance in the market in the run-up to the quarterly numbers. And I think as the numbers disappointed, one saw the market sort of coming off. And hence, I think, I would approach as we are on the anvil of the earnings season very cautiously. We already have seen a fair amount of rally, essentially led by the semblance of sort of stability returning back into global markets. And it is the global cues that essentially had taken us down over the last couple of months. So I think from the global side, I think we seem to be stabilizing. But now as we head into the earnings season, we got to take one company at a time. And that sort of is in the medium term, Prashant, what will determine the trajectory of the market essentially is how the Bihar election results pan out on 8th of November. And if the NDA were to win the elections, then I think that would reinforce the government's resolve to aggressively push through some of the pending reforms in parliament, and it will also put some sort of a moral pressure on the disruptive tactics adopted by a section of the opposition and allow the parliament to function. So that I think will be a very, very crucial determinant of the medium-term trajectory in the market. We also need to keep an eye on crude, which has sort of bounced back from its lows, because every $1 rise in crude prices leads to 6,500 crores of increase in India's import bill, and the government's fiscal burden goes up by around 900 crores. I think on the some of the other issues is the government has been clearing some of the large stressed assets. We saw Dabhol being cleared, and that sort of reinforces the belief that investors have that the government will get all the stakeholders, regulators, lenders, as well as the entrepreneurs together and try to also resolve some of the other large stressed assets in the infrastructure side. We already have seen the government rolling out a fresh package for discoms. I think 3 state boards have already availed of the package, and I believe that 6 or 9 are in discussions with the government. Now here, how strongly the government enforces the increase in tariffs and reduction in TND is key, because otherwise it will be a deja vu. We have already seen 2 times in last 10 to 15 years a relief package and going nowhere. So I think I will be very cautious. The markets have moved up quite sharply. We are trading at around 17.2 times 1 year forward Nifty. We are expecting 473 rupees of earnings for September 2016, which is more or less in line with last 10 years average. So I think how the results of some of the biggies turn out will determine the course of the action till the Bihar elections.
Okay. The elections themselves, the first round begins in about, what, 15 days or so. But the outcome is still some time away, right? I mean, so I think we'll need to. But yeah, the market trades. I think there are a couple of exit polls which have come out, which kind of still show that it's split out there, and even maybe Mr. Nitish Kumar may have a bit of an upper hand. But look at the market reaction. You won't notice it. So it's strong, and at this point, and as it should be. It's being driven by what's happening globally. It's being driven by just that sort of wave of positive sentiment of global markets being higher, spreading through here. That's what's going on. Earnings maybe will be a reality. Jolt, Ajay, PSU banks, right? So there is this upcoming SEB package which will be announced, right? Somehow that is expected to take off some stress of PSU banks. And then there is this, then there are earnings as well. From what I've been reading, because of trading gains on government securities portfolio, G-Sec yields in the quarter were down some 50 basis points. And second, some improvement in asset quality as well. These are the 2 takeaways expected out of PSU banks in the quarter. You think these are triggers enough that one could, purely from a trading perspective, buy some of these banks, SBI, BOB types?
Yeah, I think the gains on the bond book, as well as slight improvement in the relief on the stress asset front, will have to be balanced with the compression in NIMs that some of these banks will sort of be facing in the current quarter and a few quarters going ahead. But at the same time, I think the valuations of some of the top tier PSU banks, I think, are approaching attractive levels. And hence, I think the names that you mentioned, State Bank of India as well as Bank of Baroda, stand head and shoulders above the others in the pack in terms of the quality of assets, in terms of the management quality. And I think we believe that in the medium term, one can sort of look at names like SBI and BOB. But our preference, Prashant, will still remain on the private banking side. And there, I think, I would like to play a bit of contrarian because we have seen some of the retail focused banks, be it HDFC Bank, Kotak Bank, as well as IndusInd Bank, outperforming the corporate focused banks like ICICI Bank, Axis Bank and Yes Bank for the right reasons, essentially because of the asset quality being under greater pressure in case of corporate focused banks. But if you are betting on a revival in the economy over the next couple of quarters, then the sharp discount at which this pack is trading to the retail focused banks logically should narrow, and that should give a kicker in terms of the price to book for the corporate focused banks. And a bank like Yes Bank depends a lot on wholesale funding, where I think the rates have come off, I believe, around 200 to 250 basis points from 1st of Jan till date, whereas the bank funding has come off sort of only by 75 basis points. So from both these perspectives, I think companies like Yes Bank, Axis Bank and ICICI Bank, in our opinion, are at levels where they can give very good medium-term returns.
Okay, all right, fair enough. Ajay and Gaurav, thank you very much. Good speaking with both of you. Appreciate your time this Friday morning, and have a good weekend. See you soon. Let's take a quick break.